In today's video, we'll be revealing the one CRA letter that strikes fear to the hearts of Canadian taxpayers everywhere, and how you can avoid ever receiving it in your mailbox.
Through working with hundreds of Canadian retirees dealing with tax issues, we've discovered that while most CRA letters are routine, there's one notice that can completely derail your retirement plans.
It's the kind of letter that can cost you thousands of dollars, trigger months of stress, and leave you scrambling to fix financial problems you didn't even know existed.
And that's exactly why we're making this video today, so you know what this letter is, why it's such a big deal, and how to avoid it altogether.
Let's get right into it.
And the letter we're talking about is the notice of an audit.
This is one CRA letter retirees fear the most, and with good reason.
Now, receiving an audit notice means the CRA is questioning the accuracy of your tax returns.
They're going to want you to prove in detail that what you claimed on your taxes was legitimate.
And what a pain that will be, because that usually means digging up documentation and receipts going back to up to 6 years.
And yes, it really can take months or even years to get through the full audit process.
The CRA describes audits as a verification exercise where everything you've claimed is cross-referenced with your records and receipts.
That's a polite way of saying they're going to comb through every line of your return.
And for the retirees, this can create a lot of stress.
Most people don't keep organized records going back 6 years, especially not receipts for things like donations, home expenses, or maybe even some business write-offs.
Can't prove the deduction? Well, you're going to have to pay it back with interest.
And to make things worse, ignoring audit requests just escalates the situation.
According to the CRA, silence is a red flag, and that can turn a routine audit into a full-blown investigation.
Now, while audit notices are terrifying, understanding what triggers them reveals specific strategies that you can avoid to ever receiving one.
Okay, so what exactly causes the CRA to send out an audit notice?
Well, there's going to be a few key red flags.
Okay, let's start with claiming unusually high deductions relative to your income. That's one of the biggest ones.
So if your expenses seem out of step with your earnings, the CRA will want to take a closer look.
Yeah. And another issue is inconsistency. When your numbers vary wildly from year to year, it can create suspicion.
Certain types of income and deductions also get a little bit more attention.
On top of that, large RSP withdrawals, for example, can raise eyebrows.
Same goes for pension income splitting, which has specific eligibility rules.
Let's say you're still doing some consulting work in retirement and claim a home office deduction. That's another common audit trigger.
Rental income is another area where mistakes often happen and where the CRA tends to look a little bit more closer.
Also, some people are very charitable, and those donations can raise flags if the amount seems high relative to your income.
Sometimes even simple things like math errors or missing information on your return can also prompt a review.
So now that we've given you some examples of what trigger an audit notice, click the link in the description to find out how you can avoid mistakes like this and much more.
So it seems like quite a few things can come up that can trigger an audit. So what happens when the CRA does decide to audit you?
First, you'll get a detailed letter asking for specific receipts, documentation, and records.
You're typically going to have 30 days to respond.
And in some cases, they may request a meeting or a phone call to discuss your situation.
And they can go as far back as 6 years of your filing history.
CRA recommends responding promptly and being respectful throughout the process.
Being respectful is very difficult when it comes to dealing with the CRA, but that doesn't make it any less stressful.
Yeah, can you imagine trying to locate receipts from 6 years ago? That's challenging enough, especially if you've moved or you've digitized your files very poorly.
The uncertainty during this time is what really wears people down.
Often you're left wondering if you'll owe thousands of dollars or if your benefits will be frozen in the meantime.
And yes, certain benefits can be paused during an audit.
And this is really important for retirees because it can create a prolonged period of anxiety and strain to your financial situation.
That's why understanding the audit nightmare makes it clear why prevention is infinitely better than dealing with the consequences.
John, let's now focus on the financial fallout from an audit.
If your deductions get disallowed, you'll owe additional taxes plus interest.
So if the CRA thinks you were careless, they can tack on penalties for that gross negligence.
And if you hire a tax professional to represent you during the audit, that's another major cost.
And the worst thing of all is, once you've been audited, your returns might get flagged for extra scrutiny in future years.
So for retirees on fixed incomes, surprise tax bills can just throw off everything in your financial plan.
You may find yourself in a position where you have to go into savings or you're delaying planned spending just to cover the cost of the additional taxes.
Yeah, and the stress can even affect your health and relationships, especially if the audit drags on for months like we've seen in many cases.
Yeah. While you're dealing with that, you're not focused on planning or just generally enjoying your retirement.
Yeah, and given these serious consequences, implementing specific strategies to avoid audit notices becomes essential for any sort of retirement security.
So, John, why don't you walk through how people can avoid triggering that audit?
Well, I'd say start by maintaining consistency across your tax returns year after year.
So that would include avoiding big jumps in deductions that seem out of place for your level of income.
Always make sure your returns are complete, accurate, and double-checked.
Prior to filing, you should be organizing your documentation so it can easily defend your claims if you do get audited.
Good record keeping is your best form of audit protection.
Save your receipts, document the deduction, and scan everything digitally for backup, and make sure it's organized in a way that is easily found.
Yeah, and I would suggest organize your files by tax year so you can find exactly what you need if the CRA ever comes calling.
I think having clean, consistent records shows that you're following the rules, and that makes audits less likely.
So now that you understand how to avoid audit notices, let's make sure you can implement these protection strategies correctly.
Okay, so let's walk through how you can start building your audit prevention plan today.
Well, first, review your current tax filing habits.
You should be looking for anything that might seem unusual or inconsistent with previous returns.
And next, set up a reliable system to store receipts, invoices, financial records digitally and physically.
And if possible, you should be working with a qualified tax professional who knows what the CRA is looking for.
They can help you file accurately and stay under the radar.
Also, make sure you're being conservative with your deductions and not being a little bit too greedy.
And finally, create a backup plan for your digital records in case of any sort of technical issues or emergencies.
Being more organized and being more consistent can lower the risk of you ever hearing from the CRA.
So now that you understand why the notice of an audit is one CRA letter you absolutely don't want to receive, you can take specific steps to avoid it.
So if you do want help creating a comprehensive tax strategy that minimizes that risk of audit while optimizing your retirement income, click the link in the description to get started.
Thank you, and we'll see you in the next one.